Gautam Shah, founder of Goldilocks Global Research, on the show. Gautam, thanks so much for joining in. Really appreciate your time. And put this into perspective, Gautam, because this is not what's happening to India, to emerging markets, or to certain sector of markets. The oil rush and the risk off due to geopolitics will impact everything. How do you see charts? What is the most important chart to look at right now?
Good morning, Neeraj. The market does not like uncertainty. And when it gets it, first thing it does, it falls and then it thinks. I think that happened in the COVID period as well. And I think the foundation to what, honestly, to what has happened today was laid in the last 6 months with India's underperformance versus the rest of the world. And it's not just oil price spike that we have seen today. I think the rupee at a lifetime low, FIS selling, India's economy, AI disruption. I think there are just too many issues that we've dealt with in the last 6 to 9 months. And until a week back, actually, global markets were doing all well. But I think the key problem right now are two. I think number one, the fall in the bank nifty. This was the last man standing sector till last week. I think it was trading at levels of 60,000, 60,100. So the fall in bank nifty has clearly impacted the market. And obviously this oil spike. In fact, we put out a report a couple of weeks back of a possible rise there, but we didn't expect of this proportions. And even now, I think a level of 125 on WTI is entirely possible. There are still no signs of bottoming out. I think 23,800 is the line in the sand level that we have been putting out in our reports. We are right there. If this number were to break, which I think is highly likely, we could potentially go all the way down to the last year March April lows of about 22,000. So I don't think one should keep the shopping list ready as yet. The market is beyond fundamentals right now. Let things stabilize, let the world stabilize, and I think we will go back to it. But right now, with none of the sectors setting up well on the charts, this is still the time to stay away and be conservative.
Don't keep the shopping list ready. This is actually reinforcing, Gautam, incidentally, what Neeraj was presenting earlier, which is that there is a significant destruction in the past that has taken place. It is much longer than the 68 or 70 days that we've seen in the latest correction. So, but having said that, Gautam, at the center of all of this is crude oil prices. And I wonder if at this moment, with the kind of actual destruction that you're seeing, oil depots, all of that, the route getting closed off, is there sense looking at the technical levels as they stand with Brent crude at close to $120 per barrel? If so, what are the key levels you're looking at?
Technicals is the only thing that that will help you in this environment, to be honest, because fundamentally and based on common sense, you cannot trade this market or invest in this markets. I know if you're a value investor, you might say that my outlook is 10 years and therefore a lot of stocks might be lucrative at today's prices given the crisis. But I don't see that, from that lens, from a charts perspective, because things are still quite negative. Yes, oil has been a problem. And I think with this spike today, India is facing it. Markets understand it. And that's why it's reacted the way it has. And I think from a charts perspective, I do believe there is potential for another 10-15% upside. As I said, towards a NYMEX crude level of about 125, 130. But it's very difficult to say where things are going to stabilize. But there is a problem. Let's accept it. We've seen what India VIX has done. After a long time, we are seeing VIX at levels of above 20. And the point that I have made multiple times in the last 6 months, there is no leadership. IT is in a big mess. Reliance refused to participate. And now the banking index, has come under serious selling pressure. So apart from metals and PSU, non-banking PSUs that we continue to like, I think the entire market is still weak.
Where would you then look at patches of safety, Gautam, if any? Because clearly this is, like you said, don't get your shopping list ready, but this is definitely not a panic sell space, is it? Or should investors right now who are watching you look at loosening up positions?
No, I don't think this is a time to loosen positions, and get panicky, because I think a large part of the downtrend has already played out. The Nifty is correcting today. Mind you, the micro cap index and the small cap index have been in a bear market for the last 15 months. So I think if at all you want to buy something today for the next 2 to 3 years, go buy a basket of quality small caps and quality micro caps. I think that's where the opportunity is, not in the top 100 and 200, which has only now come under pressure. But the three spaces where I think one can hide, and I think that's been my view for a while now. Number one, metals. I think the entire metal space will continue to outperform. Till last week, the metals index was near a lifetime high. That's enough testimony of outperformance, and I think it's going to get better, both the ferrous and the non-ferrous side. Secondly, the entire PSC basket, where I think there is a lot of value with the dividend yield kicking in, nothing to do with foreign policy, and government stance very clear. Very good technical ratio charts as well. So that's one space that I like. And selective healthcare names. So I think this is the third basket that we like. Apart from these three, I think everything looks quite negative. In fact, I'm tempted to believe that the FMCG index will see a lot more downside. I think the auto sector is setting up for a 15% downtick from current levels. So things are looking quite negative on many newer sectors as well.
What about banks, Gautam? Your blue chip private sector banks?
They were overowned all along. You can keep building a case that they are great companies. Yes, they are great companies, but they haven't performed in the last 6 to 9 months. We have a problem. I think we need to address that. We need to accept that. I think a lot of market participants don't want to accept the problem that we've been living with for the last 12 to 18 months. I think the bank Nifty has corrected only for 6 days. It's been very new, very fresh, this correction that has taken place on the bank Nifty. And I think it's going down to levels of 53,500. Just couple of days back, the private bank index has actually broken down. We put it in our big picture report yesterday. So I think there is a lot more downside for the top private banking stocks as well. So 53,500 is my number on the bank Nifty. And only then I would be looking at any sort of bottom fishing.
Gautam, in which case you are effectively telling that 23,800 on the Nifty will not hold because Bank Nifty has disproportionately large weightage on the Nifty, and it doesn't seem like IT is going to get back in a hurry because of the AI trade, etc. So that's 40% of the index virtually ruled out. You expect lower levels for the Nifty then?
Absolutely, Neeraj. I think that's been my stance for the last few months. We've been very cautious. 23,800, I think, is a very important support. But I do believe if you do sum of part analysis, which you just did in terms of IT, Reliance, and banks, I'm tempted to believe that 23,800 will eventually break. There is a possibility of some pullback rallies from time to time. That's fine. But if 23,800 breaks, there is nothing till about 22,000 on the Nifty. So gradually over a period of many weeks to many months, you could even see that number.
23,800, Gautam, even as we're looking at the screen, has been broken. So therefore what you're saying is, so the question that I would ask therefore is the time frame. You've identified that time frame. I think, can you repeat that? And would you accelerate that time frame considering that we've already broken below that 23,800 mark?
See, all of that's happening in the markets right now is evolving. So let's give it a day or two before we can actually confirm that 23,800 has been broken. And in today's world, everything happens fast. We saw the gold and silver rally happen super fast. Now, what oil has done in the recent past, what base metals did last year. So if it has to happen, if the fall has to happen further, I think it's going to be really fast because now the top 100 have come under pressure because of all these factors, that we are talking about. I hope that by the end of March, things resolve by itself. If all of this were to happen over the next couple of months, and we then start factoring in the April results, is probably the most optimistic scenario in my mind.
Gautam, I'm wondering, I'm sure you're looking at a lot of charts right now. You talked about what you're seeing on crude. What about other asset classes? Gold, dollar, rupee. Are we all seeing a panic kind of a situation on all fronts right now, everything in free fall?
Well, we've seen a big comeback on the dollar index in the last 10 days. So I think that's a very a clear message from the market that it is concerned. And I think the rupee, dollar is probably going to levels of 94 eventually is what it looks like. So again, there is a problem and there are still no signs of bottoming. But till last week, if we remove what has happened in the last couple of days, global equity markets continue to be in a massive bull market. Let me just mention that very clearly. The European ETF, the Asian ETF, some of the top stocks in the market. People are talking about the weakness in Korea today, but look at what Korea has done in the last 9 months. Look at what Taiwan has done in the last 9 months. Look at what Brazil has done in the last 9 to 12 months. So we've already seen massive uptrends. I still believe that globally we will remain in a bull market, notwithstanding this current crisis. Unfortunately, India was not a party to that bull trend that played out and continues to underperform. But hopefully, once things stabilize over the next 5, 10, 15 days, which we are all hoping, I think global markets will definitely make a comeback. I don't see a case for major global market weakness from these levels.
Okay, Gautam, thanks so much for taking the time. And as we say goodbye, I hope that you're staying safe because you are joining us, of course, from Dubai. And please do continue to stay safe. Thanks so much for taking the time.